Hi, everyone, and thank you for joining us for today's webcast, Uranium and Nuclear Energy, Critical to Clean Energy Transition, sponsored by Sprott Asset Management. Today's webcast will be providing one CFP, one CEMA, and one CFA CE credit. If you have any questions on credit, please don't hesitate to give us a call at 704-540-2657. We welcome and encourage your questions. You can type your questions in the Q&A box to the right of the slides, and we'll get to as many of your questions as possible. Additional material are available for you to download in the Documents folder at the bottom of your screen. As always, we appreciate your feedback. At your convenience, please take a moment to take our survey that is also located at the bottom of your console. We will cover quite a bit of information during today's webcast. If at any point in time you're interested in scheduling a one-on-one meeting with Sprott Asset Management, please click the one-on-one folder at the bottom of your screen and confirm the request. In the event you missed any part of today's webcast or simply would like to watch it again, a replay will be made available and all registrants will receive that information by email. With that, I'd like to go ahead and turn it over to today's first speaker, Edward Coyne, Senior Managing Director, Global Sales for Sprott Asset Management. So Ed, take it away.
Thank you, Natalie, and thank you all for joining us today. I've got two special speakers with me today, Per Jandir and John Ciampaglia. Per joins us as Director of Nuclear Renewables and Battery Metals from WMC Energy. Per joined WMC Energy with a broad background in the energy sector spanning over 22 years. Most recently, Per spent over a decade in uranium sales and trading in various roles at the marketing division of Cameco Corporation. Per is leading the advisory work with Sprott and also focuses on commercial engagement with the investment community as well as key customers in Europe and Asia. Per has his Master's of Science degree in Industrial Engineering and Management. With us also today is our very own John Ciampaglia. John is the Chief Executive Officer at Sprott Asset Management and Senior Managing Director at Sprott Inc. John has more than 26 years of investment industry experience and serves as Chief Executive Officer of Sprott Asset Management and as a Senior Managing Director at Sprott Inc. John earned his Bachelor of Arts in Economics from York University, is a CFA charter holder, and a Fellow of the Canadian Securities Institute. I'm your host today, Ed Coyne, Senior Managing Director at Sprott Asset Management, and I'll walk you through the webcast outline. I've asked Per to join us to really talk about the shifting sentiment towards nuclear energy and explore how government policies are shifting in favor of nuclear energy and what impact these could have on policies for uranium demand. Then we'll shift to John Ciampaglia, who will then talk about uranium's bull market that we believe is underway. We'll look at why a growing number of investors are investing in physical uranium and uranium miners. We'll also explore the higher price of uranium and how it acts as a catalyst to address the structural supply deficit. And lastly, explore why invest in uranium today and why now. Before we then shift to the Q&A session, I'll talk briefly about Sprott's capabilities and credentials in managing physical commodities. For those that are new to the Sprott family, Sprott is a global leader in precious metals and real asset investments with over $19 billion in assets under management through the end of September of 2021. We're one of the largest firms out there focused on precious metals and real assets. We offer a unique suite of solutions, whether you're looking to allocate to the physical market, whether that's gold, silver, a combination of gold and silver, platinum and palladium, and of course, more recently, uranium. We also offer a full suite of managed equities on both the active side through our Sprott Gold Equity Mutual Fund, managed by John Hathaway and Doug Rowe, as well as several factor-based ETFs that give you exposure to either the senior large-cap mining stocks or the junior small-cap mining stocks. We also have a full suite of solutions in the lending business, where we actually raise capital and lend it to mid to small-cap mining companies, as well as brokerage services, where we customize solutions in the gold and gold equity markets. With that, I'd like to now turn the attention to Per to talk really about the shifting sentiment towards nuclear energy. Per, first and foremost, thanks for joining us today.
Thank you very much, Ed. Thanks for having me on again. It's great to be back. So starting off this presentation here, we're going to look a little bit at the clean energy transition that you see a lot in news and media today. And I think there is no doubt that human activity impacts the landscape, the air quality, the water quality, and arguably even climate itself. So this is sort of a collection term for how do we actually try to deal with this problem? How do we move away from emitting a lot of carbon emissions and try to switch to a society that uses much less or emits much less carbon. This initiative started basically in 1997 with the Kyoto Protocol at the United Nations, when you're trying to make an international effort to address these problems. And more specifically, with the Paris Agreement in 2015 is when the clean energy transition was born, and now we're starting to move more and more towards that. And I would say today, look, maybe around 1/3 of the electricity production today is carbon-free or low-emitting, but we're going to need to switch to something that's more like 80% in the next 30 years, which is a huge challenge. So just taking a step back and looking at what is the problem here, I'm going to focus on the global annual carbon dioxide emissions, because from a greenhouse perspective, that is basically 75% of the effect is caused by carbon dioxide. And as you can see on this timeline, it's pretty much the definition of an exponential graph, and it's really started with the Industrial Revolution and had just snowballed since then. There has been some periods with reductions, but I think we can all agree that an economic crisis, war, or pandemic is not a great way to solve this problem. So something a little bit more constructive. This is also not a new problem. Scientists have been aware of it for quite some time, but I would say up until the 80s, no one really cared about it. In the 90s, people started to care, especially with the Kyoto Protocol being formed there in 1997. And in the early 2000s, they actually started to gain quite a lot of momentum, but what happened then was the financial crisis came along, and basically it all went by the wayside. So looking at what is different now this time around. And what we're seeing is that major nations are committing to net zero targets. And this is despite COVID, despite all the struggles we've had over the last few years, it is still continuing to gain momentum. And carbon neutrality, net zero initiatives, these are basically the same concept. And it can be done on an international scale. So if you're emitting in one country, in order to be carbon neutral, you can reduce emissions in another country. And there certainly are a lot lower hanging fruits in other countries. If you're in Norway, for example, where you're 95% hydro, have no emissions, you can invest in India or in China and try to address the problems there. So because it's a global problem, there's only one planet, there's only one atmosphere, so one change in one country also affects a change in another country. So what we're seeing is that quite a lot of parties now are actually enacting laws how to address this, and Canada, Europe, the UK, Japan, and New Zealand have it actually written into law. And there's policy documents with a host of other large emitters, such as the US, Brazil, China, and Australia, and it really is gaining momentum. And these are very significant changes. It will have a real impact on emissions if these are indeed followed. And it's more focus on climate issues than I've ever seen before, and it is gaining momentum. And also to keep in mind that going from 35 to 80% of low carbon emissions by 2050 is a pretty huge task in a static world, but we shouldn't forget that it's also projected to be a 50% increase in electricity demand over the next 20 years alone. And this is even without electrification of the transport sector, focusing on that, which even can compound this even further. So it's a very big challenge ahead of us, and it also addressing this challenge calls for some fundamental changes over the energy systems.
Per, I'm going to stop you there for a second, because I think this chart is worth really thinking about, because the reality is we all talk about how can we use less and what technology is going to allow us to go greener. But I think it's lost on the fact that we're going to see basically the demand for electricity go up by over close to 50% in the next, 2 decades. Mm-hmm. That, I think, is a staggering number in itself. And so you and I have talked about this many times, how it's not one thing or the other, that we're going to really need everything we have. And I think, going to a electrification, going to a carbon neutral, going to a nuclear type of solution is just part of the solution. And these numbers to me are just staggering when you look at this as far as just the use relative to the demand.
Oh, absolutely. I mean, you're so right. It's not one or the other. It's not $1 spent on this. It's $1 not spent on that. It is enormous investments that needs to be made in this, and every technology is going to need to be part of this solution.
Yeah, thank you.
And looking in particular what it means for nuclear growth, of course you're going to have renewables. A lot of efforts are made on renewables, but looking at it from an energy system standpoint, you need a stable backbone of baseload power in the transmission system. That needs to be there in order for it to work. It needs to be energy supply regardless of if the wind is blowing, if the sun is shining, if the rain is falling. And you can have gas for this, and gas is certainly better than coal and oil, but it's not great from an emissions perspective, and it also can get quite expensive, as we're seeing today. Not to mention the energy security aspect that Germany is probably feeling right now in Europe, where it's hard to play tough against Putin when you're going to be very dependent on their gas going forward.
Right.
So looking at nuclear and the role they can play, and is playing in a lot of countries, is that if you have a nuclear power station, you only refuel it once a year or once every 2 years in some cases. And you always have a reload worth on site at the nuclear power station itself, which means that you can run for 2 years at any given time and you're not held hostage to any supply chain issues or any geopolitical events that may happen. On top of that, the fuel cost for nuclear power is only about 5% of the total operating cost. If you're looking at gas, it's about 70%. So you're a lot more price sensitive in gas power than you are once you have built the nuclear power station. Because again, the expensive part is to build the power stations. Once you have it, use it as much as you can.
Well, I think the supply chain issue is something that rings true with everybody, whether you're building a house or buying a new sofa. So you can only imagine when you're talking about fuel or nuclear, how these are real concerns, particularly going forward.
Oh, absolutely. The good thing with nuclear energy is that it's fairly insensitive to it, especially compared to other industries. So looking at a little bit more on the policy initiative, this is actually a slide that we talked about 6 months ago. So I'm just going to highlight some of the changes that have happened. And I mean, everything nuclear moves at a snail's pace. Mm-hmm. Just looking at how things have changed and is changing. At the United States, for example, this was obviously talking about the budget. Now the infrastructure bill is in place. There is $6 billion of tax credits to support power plants that are aging or in threat of being shut down. This is only up to 2026, not to 2031. But in the next 4 or 5 years, you're seeing $6 billion, which is quite substantial. And you have already seen power stations in Illinois, for example, being rescued as well. And this is gonna spread throughout the country. You have also $3.5 billion for advanced nuclear power. This is also in the bill. And on top of this, you have $8 billion for clean hydrogen, and nuclear is definitely going to be part of that as well. So there's quite a lot of funding already available in the United States today. The main change has been Europe. You're looking at the taxonomy. It's more or less a done deal already, so people are starting to plan for it. Countries are announcing that they are going to extend the life of power stations. They're going to build new nuclear power. Holland, for example, has been very quiet on the nuclear market. They have a couple of power stations, but they're very small. They announced that they're gonna build new reactors. They're gonna start up their program again. Poland has a very ambitious program that they're embarking on. The Czech Republic, Sweden, and Finland are all discussing new build and life extensions. And most of all, that we all heard a couple of weeks ago, is France, with Macron announced going to build 6 new reactors and potentially 8 more. And these are not any reactors. These are the EPRs that they build. And those are 1,600 megawatts apiece. So when you talk about a small reactor, for example, that's about 300 megawatts. This is 1,600, so at least 5 of those in one reactor alone.
Wow.
And again, look at going on with China. They've obviously been on a very, very clear path for the last 10 years. Now you look at them in their planned reactors or proposed reactors in their plans, it's over 150 reactors in the next 15 years. So staggering numbers there, but they are...
Say that number again?
150
wow.
reactors
okay.
15 years. And they're on target. They're building a lot of them already and announcing new ones as we go. Mm-hmm. Japan, again, obviously they have a huge setback during the Fukushima disaster, and they're about 5% today, but they already have in their goal that they're going to be up at 20% by 2030. So a lot of very real things are happening. Policy announcements are one thing, but here you see real changes actually happening.
And I think it's interesting, too, because so many of us in the U.S. that are on this call, they think of whatever happens here as what's happening globally. But in this case, it seems like it's just the opposite. We're sort of playing catch up, and other parts of the world are really leading the charge in this.
Absolutely. It really is. Like I said, China has been on a path for the last 10, 15 years, and they're only picking up speed. And the really positive news is Europe, that things are really coming around there, and hopefully it spreads over here too. It certainly seems like it with bipartisan support. I think the potential in this country here is really, really big.
Great.
Looking a little bit at the reactors in the world today, of course the number, about 440, it's about stayed the same for the last 2 decades. So the total number might be the same, but the capacity has gone up, and that is because some of the older reactors that are being decommissioned, they're fairly small, maybe about 500 megawatts, and the new ones that are coming online can be 2 or 3 times the size of that. So the overall impact is that the overall capacity is increasing. And looking at the construction of a power station, that's basically the definition is that once you start pouring the concrete, then that's when the construction is started. They plan about 5 to 7 years to get it online. Now you look at the ones being built in the United States, in France and Finland, certainly been a lot longer than that. But at the same time, you also get a lot more experience from that. And it's first of a kind reactors is always hard to build, but the collective experience from this is obviously going to serve you very well going forward when you build new ones. I will like to highlight another project that's probably not so well familiar in this country. It's in the United Arab Emirates, the Baraka plant. It's 4 reactors, 1,400 megawatts each, so it's a very, very big site. It's Korean design. They started building it maybe 5, 6 years ago, announced obviously before that, but it's on time and on budget. A plant of this size to be such a success story is really something that haven't been highlighted enough, I think. It's probably a fairly quiet part of the world from a European and North American perspective, but it really is a success story, and it just goes to show that there are really good technologies out there and they can deliver.
Well, to have on time and on budget in the same sentence is something I've never heard before. So that's quite impressive.
No, it really is a success story. So I think a lot can be learned from that, and it's learned too, and they're very open to share information and share the success stories that they've had and experience with it. So it's a very, very good story for nuclear energy in general. And over the next few years, what we're going to see is obviously we're going to see more and more reactor being announced, and these green numbers you see here, they're going to move into the blue once you start construction, and eventually go yellow. And from the other side, you also have, with the life extension plans and money support funds being available for that, you're also going to see less reactors fall off. So the yellow numbers will not diminish as the reactors are getting older.
So the efficiency, both from a production standpoint, but also from a cost standpoint. I mean, these reactors, from what I understand, cost between $6 and $10 billion to construct and build. I mean, people probably wonder where the money actually comes from. I mean, if you think about it from a country by country basis, any thought on that, just to get a sense of where this capital is it simply just from the tax base, or where is it coming from?
In a lot of countries it is, especially in the Western world. In other countries there could be support from China for Chinese reactors. The Russians traditionally help to, when they build reactors, they also provide some financing.
Okay.
And obviously, the Emirates, they have plenty of money there, so that's they don't really need financing.
Right. So it's case by case.
Case by case.
Yeah, and I think it's great though that the newer ones will stay newer and in production longer. So the cost per construction, per hour, I guess, or energy hour becomes more attractive over time.
It certainly does, absolutely. And then switching quickly to Uranium Air, and this is such an interesting slide, and we can probably have a separate webcast on this alone, but I just want to highlight a couple of things on this and not focus on so much where the uranium has come from. But of course, one thing that stands out is there was a lot, and it's probably unique for uranium, that you had so much uranium mined even before there was a demand from a reactor perspective, of course, and this is the effect of the Cold War. So a lot of uranium in the 50s and 60s was mined as a part of the nuclear arms race. Now, if you look at what happens with that, so sure, some stockpiles are around and some weapons are around, but one of the other success stories of the nuclear industry, if you look at the gap between the requirements and what was being produced in the 90s through to 2010, is actually that some of the warheads were downblended, the uranium was downblended and fed into civilian reactors. And it was Russian warheads, and that was dismantled and the uranium was blended down, and it fed American reactors. It's called the megatons to megawatt program, and it was for 20 years. It actually provided 50% of the U.S. demand. So you had warheads that was pointed at the U.S. that then provided 10% of the entire country's electricity, which is a really good success story.
That's a phenomenal success story, and I wish we would have promoted that more as a country. That's actually a phenomenal story when you think about what that means politically as well as environmental.
Absolutely. The other thing I want to highlight here is the increase in demand from 1970 to 1990. It was obviously an extreme increase in that was like building nuclear power stations, but it was done in the 1970s. It really obviously wanted to remove the dependence, again, energy security dependence on oil because of the oil crisis. So that's why you saw a huge success for nuclear energy. It was really when the industry really took off and started. And I just want to highlight, like, if we're serious about the decarbonization and the net zero issues, and the policies and announcements are being made today, if these are going to take place and translate into uranium demand, we're going to see a similar increase, if not even bigger. So this increase is not enough, and that's what we're looking at for the next 20 years.
Right. Interesting. Thank you.
And the final slide here I just want to point to is production and demand and supply picture, essentially. And demand is obviously projected to grow as we're building more and more reactors. And this green line is certainly going to start to shift over time. And you have shutdown reversals and life extensions. So that's going to start sort of having an immediate impact on the near end of that curve. And then as you have more new reactors being announced and certainly coming online, that's going to start lifting up a little further out in time. And something to keep in mind too, like once you start a new reactor, the initial core is 4 times the annual requirement because you're starting from scratch. You're not just replacing a little bit. You need an entire new core and you place that in there. So that's a lot of uranium that goes into that new reactor. And as far as new production coming online, there is production available. Certainly is, but inflation and supply costs have a potential to drive those costs up a lot. Okay. And we're looking at $55, $60, and it's going to be something well north of that.
And it wasn't that long ago, it was at $30 a pound, correct?
Exactly. It keeps moving up all the time.
Yeah.
And lastly, just focusing on the gap there between obviously supply and demand, because there is a persistent gap. And part of the reason that has been able to be there is the stockpiles we showed before, where the uranium was mined before actually was needed. So there's been plenty of those lying around. Other inventories, there's something called underfeeding. When you have an enrichment facility for enriching uranium, you can actually create uranium in that as well if you don't have enough demand for your enrichment services. There is a recycling of spent fuel as well. Some of these sources are finite. Obviously, the stockpiles definitely are, and the underfeeding is the limited quantities, and recycling is very expensive, and France is doing a lot of that, but you're dealing with liquid spent fuel, so very complex and expensive process to do that.
Okay.
And so looking at the finite sources, and it was projected to maybe last until 2030. That was, say, 15 years ago. Now, Cameco and Kazatomprom have reduced their production, and they have bought well over 55, 60 million pounds. I think that's Cameco alone. And Kazatomprom basically reduce your production and then buy uranium in the market to feed into your long-term contract. So that's increasing the speed of the depletion of the secondary supply. And obviously, there's last year was unprecedented purchases in the market from investors, and not least of all was Sprott's uranium fund. That's 25 million pounds that was not part of any forecast, and that's been taken out of the market as well.
Well, and that's a good segue, and thank you for that, Per. And we're going to actually, at the end of this webcast, turn back to Per as well as John, who I'm going to introduce momentarily, for some Q&A. We've got a lot of nice questions coming in, and as those continue to come in, we'll address those at the end of the webcast. Well, Per, thank you for giving us the green initiative view, the demand view, the nuclear view. I'd like to shift now to John and have John really talk about the bull market that we believe is underway and really talk about uranium from an investor's point of view. How can you on this call, how can our listeners on this call really participate in what we see is a potential bull market? So John, I'll shift to you now and talk a little bit about what's going on from the investor side of the table.
Yeah, thanks, Ed, and thank you everybody for joining us today on the call. Investor education is really important to us, and I know this topic is new for many people, including very sophisticated institutional investors that we've spoken to over the last several months. So that's one of our key goals today, and if you do have questions, please send them in. We'll do our best to circle back. Per, thanks so much for that excellent overview. You definitely are a subject matter expert, and we're very pleased to have you act as a technical advisor to the Sprott Physical Uranium Trust. You've really provided a lot of valuable historical and present-day perspective on what's going on in the nuclear energy and the uranium sectors. Now I'd like to shift gears a little bit and talk about my perspective that I have gained over the last year speaking to dozens of investors about this topic. And what I can tell you is that, nuclear is a highly polarizing topic and evokes a lot of fears in people, whether it's from nuclear war or some of the large-scale accidents that have unfortunately happened in the past. But the narrative has really changed, and governments are changing, and investor sentiment has changed. I just thought I'd start off by sharing what I have learned and what I thought has been really interesting from the investor's perspective. So again, these are not my views. These are views that I have formed based on dozens of different conversations I've had with investors in the sector over the last year. So my first point I wanted to share is that interest in uranium is truly global. I have spoken to investors right around the globe. It's not there's no real preference in any one sector. There's lots of interest in North America, Europe. Lots of interest in Australia, New Zealand, Asia, Singapore. Had dozens of calls with people right around the globe. So it's really a global category. And I think when you look at the previous slide showing you all the reactors and all of the countries focused on decarbonization plans, I think that's exactly why. The investor types are incredibly diverse and more diverse than I probably thought. Lots of institutions interested in the category, family offices, RIAs, and individual investors. And they've also have many different mandates. And this is probably one takeaway that I underestimated is how diverse the interest is. I've spoken to people that are running general equity portfolios, small cap portfolios, international equity portfolios, value strategies, commodity strategies, macro strategies, and energy transition strategies, which I think are, you're going to hear this term more and more as a key investment theme. As a society, we've spent the last 150 years building many different systems and networks and infrastructure related to fossil fuels-based forms of energy, and the next 30, 40 years are going to be very focused on transition to more renewables, nuclear, and new technologies that are going to help us to decarbonize the atmosphere. A lot of investors are invested in physical uranium or vehicles that hold physical uranium, and they're also invested in the underlying equities, and I find that almost universally. And despite this interest I'm talking about, I would tell you that after a 9-year bear market, this is not a crowded trade. These are, I would say, early adopters, people that have done their homework, somewhat contrarian in nature, and that's why we think it's still in the very early innings. On this slide are just some headlines from major publications that we've been collecting over the last few months. And as you can see, the narrative has clearly shifted. There's growing acknowledgement by governments and the media that nuclear needs to be part of the green energy mix. There will always be tremendous support, whether it's financial or regulatory or policy for renewables, but the world has figured out that we cannot be 100% reliant on renewables alone. So this growing recognition that nuclear needs to be part of the mix if we have any chance of hitting our greenhouse gas reduction targets is really the driver. I would say the other key theme is science over fear. I've seen lots of scientist groups coming out in favor of nuclear energy, and I'll talk a little bit in the presentation about nuclear's track record. And my sense is people are more afraid of climate change than they are of the risk of a large-scale accident at a nuclear power plant. And that's my personal belief based on the conversations I've had with many of these investors. Energy transition is a key theme. There's lots of things happening in Europe right now that are giving people a lot of anxiety, and I would say, and having a very dire financial impact on them. Whether your home heating bills have doubled in the UK or continental Europe in this past winter, it is having a real issue. The other key theme is obviously around energy security, energy sovereignty. You're going to hear these terms more and more. Per talked about Germany's decision to close most of its power plants in the last few years. They just closed 3. They have 3 left to go. At the same time, they're hugely dependent on natural gas from Russia. How that's being played out right now with the current issues in the Ukraine. And then the headlines, have really changed from governments. The U.S., Per talked about being very pro-nuclear from a Democratic administration, which I find amazing. You often see photo shoots of the Energy Secretary at power plants showing her support for nuclear energy and new technologies. Japan clearly would like to get more power plants back online. The UK has pledged financial support. France, the biggest user of nuclear energy, is just in the last week or so signaled that they would like to build up to 14 more plants. And yes, countries like Germany, Spain, Belgium are all on the path of winding down nuclear power plants, but I think the current environment, I'm sure, is giving them a moment to rethink that. Why don't we go to the next slide, please? So a lot of this is about reliability and energy security and sovereignty. And Per talked about how nuclear energy is the most reliable because it operates almost all the time. So we call this base load power. Things like renewables have issues with intermittency. Obviously, at nighttime, you cannot collect anything from solar arrays. And when the wind is not blowing as much as your model says, you have issues with wind. And when it doesn't rain as much, you have issues with hydroelectric. And these 3 issues are happening right now around the world. Europe, in the past year, is having big energy issues because the wind is simply not blowing as much and it hasn't rained as much. And so what happens? You have to fire up coal and natural gas power plants as your backup plan. And obviously everyone is trying to move away from those forms of energy, so it really puts them in a conundrum. Energy is really the perfect complement to renewable energy, and that's really what we hope most governments come to acknowledge. Moving to the next slide. Nuclear energy is super efficient, and uranium in particular. This is just a fun little illustration of how much energy is within different forms of fuel. So if you look at one uranium fuel pellet, which goes into a nuclear core, about the size of a gummy bear, provides the equivalent energy of 3 barrels of oil, 1 ton of coal, and 17,000 cubic feet of natural gas. Moving to the next slide. We've talked a lot about decarbonization, climate accords, climate change, and this is all about greenhouse gas emissions. And if you look at this chart here that shows how much greenhouse gases are emitted by different forms of power, you can see that nuclear, wind, and solar, and to a lesser degree hydro, really lead the pack. And coal is the dirtiest, and that's exactly what many countries have been forced to do as the price of natural gas has increased enormously this year. And as some of the renewables have not produced the same amount of energy as predicted, they've had to rely on natural gas and coal, which really defeats the whole purpose of decarbonizing. Why don't we go to the next slide? And I've talked about the safety track record, which I think many scientists have acknowledged. If you look at the long-term track record, of nuclear compared to different forms of energy. Nuclear is one of the safest, and conversely, the most dirty and the most dangerous is coal. And I think most people don't realize how much of the world's electricity is still being produced by coal. Places like China are still over 50%, and yes, that number comes down every decade, but they still have a long way to go. So generally, producing nuclear or operating nuclear power plants is very safe. Yes, we've had a couple of very large-scale accidents, but overall, if you compare it to all the different forms of energy production, it has a very good track record. Let me go to the next slide. Okay, so this shows you the chart of the uranium price. This is in the spot market going all the way back to the late 1960s. And then you can see that there was 3 different periods where the uranium price was propelled very strongly for different reasons. So in the 1970s, there was an oil price shock, which was the big catalyst. People were worried about being reliant on Middle East oil. That really provided a lot of policy support to build out the nuclear fleet, which happened in the United States and Europe. And then if you look at the big spike there, that was really driven by the commodity supercycle, the Chinese build-out of cities and infrastructure, and you saw the price of uranium skyrocket to almost $140 a pound. After the financial crisis, it kind of moved it back down to $40, and right before the Fukushima accident in 2011, the price was around $70 to $75. And then, you know, the sector obviously suffered enormously as countries like Germany signaled that they wanted to close down their power plants, and the price of uranium fell down to about $18, which was not an economic price for anybody in the world to pull it out of the ground. And we saw major producers shut in large-scale mines or curtail production, and that helped to rebalance the market. This current bull market, we think, started in late 2016 after basing it around $18. The price has kind of been grinding up to kind of $30 a pound last year, and right now we're around $43. And we did touch about $50 in the fall of 2021. So you can see that when the price wants to move in this sector, historically it really goes with previous gains in the 600 to 1800%. We think we're still in the very early stages of getting back to equilibrium pricing. Equilibrium pricing is basically a price that incents a producer to actually mine the uranium and bring it to market. And for the last few years, there has not been an incentive price, which is why a lot of production has been shut in. Why don't we go to the next slide, please?
John, let me just stop you for 1 second.
Yep.
You know, you talk about equilibrium pricing. You know, with it trading between the $40 to $50 range and currently around $43 a pound, you know, is there a number? Just, you know, I'm not asking you to prognosticate what the number is going to be going forward, but what would the equilibrium pricing be based off the information we currently have?
Sure. Well, every producer and every mine has a different cost curve. But let's just say that right now that certain producers still have an incentive to actually buy in the open market to fulfill contracts that they had made years ago, then actually restart their production. And yes, Cameco in the last couple of weeks has signaled that they are going to reopen in 2 years from now a mine that they closed 4 years ago. So you think about, you know, it's basically going to be 6 years from closure to back to production. And so it's starting to happen. But the reality is, as Paris said, the inflation rate and the costs of everything, whether it's materials or labor or shipping, logistics, fuel, have gone up so much that price, that incentive price, keeps going up. And I think that's one of the elements that investors are really focused on right now. I would say one of the key questions I got last year from institutional investors and many investors was, has the price of uranium hit its inflection point? Meaning, has it finally broken out of this kind of zigzagging sideways action that it experienced for many years? And they were all looking for this signal to say, okay, it's real this time. It's not going to be a false start. It's really broken out. Something's happened. The catalyst has happened. And I would say right now, the question I'm getting now is, when are we going to see the inflection point in the term price? And I'll just go back a step and explain the difference. So the spot price of uranium is really where you can buy uranium if you were going to take delivery today. And most non-utility buyers are focused on the spot market. The term market is where utilities contract to buy. And so it's not a just-in-time inventory system. You can't run a nuclear power plant on that basis. So they buy uranium years and years in the future. They want to have security of supply. They want to have security of price. And so these contracts are entered into by utilities and producers for future delivery. And I think what people have been most focused on the last few months, based on my conversations, is have we seen the inflection point for when utilities are going to resume long-term purchases to make sure they have future inventory. And I thought the recent conference call by Cameco, which is one of the world's biggest producers in the world, just a couple weeks ago, was a really interesting signal for me and many others, because they said in 2021 they had contracted to sell 30 million pounds of uranium for future delivery to utilities. And they said that so far in 2022, and remember this call was about 2 weeks ago, they've already booked 40 million pounds for the early start of 2022. That to me is a very good sign that the utilities are starting to take notice of the changing dynamics in the uranium market, and they're more concerned about security of price and security of supply than they were before, when, quite honestly, there was no urgency because the price was just kind of zigzagging between $20 and $28 for a number of years. So there's clearly a mind shift that's happening with the utilities. They're starting to take action. They're starting to, re-engage with the producers and putting out RFPs for longer-term delivery. And I think that's a really good sign.
That's fantastic. Thank you for that. That's helpful.
Sure. So let me just talk a little bit about slide 23 there, and you can see what's happened to the price of uranium over time, and also the impact that non-utility buyers. So these are anybody, a financial intermediary, it could be a hedge fund, it could be an investment fund. These would be buyers of physical uranium because they have a bullish view on the price of the commodity, and so they will invest in uranium in different forms. And you can see there in that first commodity supercycle going back in the mid-2000s, it was fairly active. Non-utility buyers, mostly hedge funds, were pretty active in the marketplace. There was at least one vehicle in the marketplace as well participating in that. And then after Fukushima happened in 2011, you can see that it completely evaporated. So for a number of years there was just really nothing was happening. The utilities were basically able to buy a lot of uranium without a lot of competition from non-utility buyers. Yes, there was a little bit of a blip there in 2018 when Cameco closed the MacArthur River mine and another investment vehicle came to market. But you can see there's been a long period there where non-utility buyers have not had much impact. Now look at the bar for 2021. It's obviously gone straight up. And a lot of that has obviously been the Sprott Physical Uranium Trust coming to market. And I'll just talk a little bit about what impact it's had in the marketplace so far. So why don't we go to the next slide. So this vehicle was launched just in July of 2021. It's hard to believe it's only a few months ago. And it was formed from an acquisition of Uranium Participation Corp, which was an investment vehicle that began way back in 2005. And I always like sharing this stat with people. So from 2005, which was in that commodity supercycle, to July of 2021, so it's about 16 years, over that period of time, Uranium Participation Corp acquired 18.1 million pounds of U3O8. U3O8 is the form of uranium that the trust holds. It's sometimes called yellow cake, and it's essentially a yellowy brown powder that you store in steel drums, like oil drums. And that's the starting point along its journey to enrichment and conversion and ultimately becoming those fuel pellets. So it took them about 16 years to accumulate this 18.1 million pounds. So the Sprott Physical Uranium Trust comes along in July. It's completely re-engineered, and investors obviously respond. Why don't we go to the next slide? And investors respond, way beyond our expectations. It's now the world's largest physical uranium trust. It's gone from $600 million to approximately $2 billion. And this is important because what we've noticed is as the fund gets bigger, it's allowed more and more institutions and larger institutions to get interested in the category. The reality is there's not many liquid and large ways to invest in the sector. And the reason for that is because for 9 years, the sector was basically shrinking. Bear markets really wipe out a lot of companies and investments, and there weren't a lot of investments left standing. So as the fund gets bigger, there is a bit of a network effect that allows more and more parties to get interested in it. It's a very liquid and convenient way to own physical uranium. Obviously, it is the most regulated substance on Earth for obvious reasons. So it is a way for investors of all types to get interested in it. It trades on the Toronto Stock Exchange. There's also an OTC ticker. And this is a closed-end fund, but it can issue new units when it trades above its net asset value, and that's exactly what it's done. So as the fund has traded above its NAV, we've been able to issue new units through something called an at-the-market offering. And you can see that with the capital we've raised, we've gone from 18.1 million pounds, which we acquired through the acquisition UPC, and the fund now owns 45.9 million pounds of U3O8, which is why on the previous slide you saw that big pop in 2021. So the trust has not been the only driver of it, but it's been a meaningful driver of that return of the non-utility buyers. We have other investment funds out there doing this as well. We even have some uranium mining companies that have been buying physical uranium and parking it on their balance sheets as they've raised equity. So there's been a lot of interesting things happening. And all of this buying by non-utilities has clearly woken up the utilities, because at the end of the day, they need this to operate their power plants. There's no substitution. You need this uranium. So that shows you that the growth in assets, growth in uranium held. The next slide talks a little bit about, or shows the daily and cumulative pounds. And I think that what the key takeaway here is, historically, before we entered the market, many industry participants complained that the uranium market was very illiquid, it wasn't very active, it wasn't very transparent, the price discovery was questionable, and I think our entrance into the market and all of the support we've received from investors around the world has really allowed us to reinvigorate the spot market. And this just shows you how much uranium we buy day to day. All of this is completely transparent on our website. We disclose it every night, how many pounds the trust holds, how much cash it holds. And this has been something that's been very well received by investors because the market is not very transparent. And if we go to the next slide, please. I'm going to touch briefly on the other side, which is the uranium miners, which I mentioned. A lot of investors seem to own them both. It seems different for everyone, depending on how aggressive you want to be. Uranium stocks are more volatile, obviously, than the physical commodity. So everybody has a different volatility tolerance, but they're often held together. And what amazes me is that when you think about 10% of the world's power generated by nuclear energy, and then you look on the chart on the right, and you look at the collective market capitalization of all the uranium miners in the world that we were able to find. There's 83 companies. So these 83 companies are different producers, developers, and explorers. If you were to sum up their market capitalization, it's $29.06 billion, which is nothing when you compare it to some of the oil and gas companies on the left side there. So it's equivalent to about 1/10 the market cap of ExxonMobil. And obviously, the market cap of $29 billion, as I said, it's been repressed over many years because of the bear market, but we think this is finally coming back to life, and that the only way the future needs of all the existing and planned nuclear reactors, their needs in terms of their supply are going to be met is if there's more investment in the sector, whether that's exploration and development. And so we think the companies involved in the sector are very interesting investments as well. And so why don't we wrap up in the interest of time, because I know we have some questions. And so I'm just going to sum up by saying there is clearly a shift in acknowledgement that nuclear needs to be part of the mix, and that a new bull market is clearly emerging in our minds. Non-utility buyers are clearly helping, but the utilities are the ones that ultimately need the uranium, and they're the ones that are going to be re-engaging with producers and contracting for their future needs, which we think will provide an incentive price and bring those pounds to market. If the incentive price is not reached, we think that the supply of uranium will continue to be constrained with either idle mines or stalled development projects or curtailed production. And so it's something that is going to take time to play out, but it's a critical element, and the world is acknowledging that we need nuclear as part of this mix, and we think the market fundamentals are very favorable as a result. And I'll just pause right there, and we'll open up to questions.
Well, thank you, John. And yeah, I'd like to get to the questions quickly as well. I just wanted to reiterate our suite of offerings within the commodity trust, whether it's our uranium, our gold and silver trust, which is CEF, the gold trust, which is PHYS, the silver trust, which is PSLV, and the one I like to refer to as the original green metal, which is SPPP, which is the Sprott Physical Platinum and Palladium Trust. You can certainly access all those on the New York Stock Exchange as well as the Toronto Stock Exchange, with the exception of the Uranium Trust, which is going to be one of the first questions, because I've gotten it about 6 times now on the screen, that I will ask of you in a moment once I turn it back to Natalie to refer to a few compliance comments we need to make first, and then we'll go into the Q&A. And for those that want to get more information on the firm or our funds, specifically as it relates to uranium, I encourage you to reach out to your respective senior investment consultants on page 32, whether you're on the West Coast, Central Region, or East Coast. You can also always reach out to me directly, Ed Coyne, I'm the Senior Managing Director at the firm. We'd be happy to address any questions or concerns or interests you have, and send out specific material that would be helpful in understanding more about who we are and what we do within the market. So with that, I'll turn it over to Natalie, and then we'll open it up for some questions.
Great, and thank you all for such an informative presentation. Just as a reminder, a copy of today's presentation, as well as additional material, can be found in the Documents folder at the bottom of your screen. We appreciate your feedback. Please take a moment to fill out our brief survey, also located at the bottom of your screen. Our speakers will be taking advisor questions. Please type your questions in the Q&A box to the right of the slides, and we'll get to as many of your questions as possible. In the event your question is not answered on today's webcast, a member of the Sprott Asset Management team will reach out to you directly. And if you'd like to have a conversation to further discuss the ideas that were covered during today's event, please click the one-on-one folder at the bottom of your screen and confirm the request. So with that, Ed, I will turn it back over to you for our first question.
Great, thank you. And as I mentioned, the first one's really about access. So as John, as you mentioned, the Uranium Trust is currently available on the TSX, the Toronto Stock Exchange. But what about the U.S. market? The question's been asked a couple different ways, but effectively, will it be listed on the New York Stock Exchange, and if so, when? What's the outlook on that, or what can you share about that? Yeah,
sure. So right now it's on the OTC, listed as OTCQB level, and the ticker there is SRUUF. And part of our original acquisition plan of Uranium Participation Corp was a pledge by Sprott to financially support the listing of a New York application. And right now that application is working its way through the New York Stock Exchange. We have no idea how long it will take to go through the SEC and what we'll encounter there, but we're very focused on trying to get it listed on the New York Stock Exchange, just like all of our other trusts. But it will take time because it's never been done before with physical uranium. So the journey is about to begin in the next little bit, and we're hopeful we can get it done. We think it'll add a lot of value to shareholders.
One of the other questions that just popped up, which I thought was kind of a funny one, which is worth asking is, and this is from an investor that actually owns our physical gold trust. One of the unique things about our trust is you can take physical delivery of the metals if you see fit. What do we do with uranium? Are we sending that to people's houses?
Yeah, as I said, it's the most controlled substance in the world. So, no, we will not have any physical redemption feature of any kind on the uranium trusses.
Okay, I thought that was worth pointing out. I thought it was kind of a funny question. All right, so let's go back to some serious stuff here. So this one's a good one for you, Per. So one of the questions is, what are some of the bright spots to specific headwinds that we've seen over the years as it relates to uranium and nuclear, most notably the age of current nuclear power plants, which I think you touched on a little bit in the U.S., and more importantly, what is their replacement cost, and I guess also not only cost, but profitability? Can these things actually turn a profit? So any comments on what's going on, and particularly into the U.S. market as it relates to power plants?
Yeah, please, absolutely. I think most of the U.S. reactors, when they were built, they were designed for 40 years, and that was the operating license. Basically, you apply to NRC, the National Regulatory Commission. They give you the operating license, and the idea was we're going to operate for 40 years. Now, what we've found, obviously, as you go through this, they look at these reactors, they're 30 years old, and they're like, well, this is actually in great shape still. So right. How about why don't we just extend it? So they've been talking to the NRC about that, and you have extensions to a lot of them. I don't know if it's the majority, I don't know exact number, but it's say that 60 years, you extend it for 20 more years. You have to replace some big components, absolutely, but you're talking about a 50% life extension of the plant. And now it's even 80 years, and there are some people discussing that potentially even 100, but say even if you're going to 60 and 80, the initial payment has already been done. The construction, the site is there, all the infrastructure you need for it. You absolutely need to replace some large components, but it's obviously a lot more affordable to just extend the life of an existing reactor than it is to build a brand new one.
Sure.
But so that's on the existing reactors. On the new reactors, it's the French model that they've done so well is basically they have 1 or 2 reactor designs and they build about 50 or 60 of them. So the economies of scale when it comes to the maintenance costs, the spare parts that you need, you basically can take one piece from one reactor, move it to another, or have a central storage for your spare parts and or sort out the logistics in that way. So I think that is really something that I hope more and more countries will go to. Focus on a few designs and go with those, because there is so much funds to be saved on this.
Right. And I think you mentioned, was it Korea that you talked about, or what was Hong Kong maybe? What was the reactor you talked about that came in on time in
that was it's a Korean design.
Korean, yeah.
Built in the UAE.
Yeah. So I think copy that model and move forward. It sounds like to me.
Yeah. No, absolutely.
Here's another one I think is kind of interesting. This is for you also, Per. It talks about really climate. The global climate change proponents. Are they actually on board, and are they accepting nuclear energy as a viable alternative to fossil fuels? Like where in your travels and in your conversations, are you seeing more and more people get on board and say, yeah, we see this as a green energy solution?
It is, absolutely. I mean, it's I think now it's 10, 15 years ago, but one of the founders of Greenpeace actually came out to be pro-nuclear.
Wow.
And it's like things are really, really changing. And it's... I think it was last week I saw the Green Party in Finland has now stopped fighting nuclear energy as well. They're actually embracing it as a technology because they realize, just like John's point here too, we're more afraid of what climate change could potentially do than a nuclear accident.
Right.
Like at some point you need to start making a difference. And I think that's really coming home to people now. It's like, what are we fighting against there anymore? It's just not this symbolic thing. We have a bigger issue we need to deal with. So let's cast aside these ideological perceptions we've had for some time before. So it's definitely more and more coming around, and that's why we're seeing the tone in media is changing. It's a lot more positive news coming. People are questioning decisions like Germany is making of phasing out. Like, what's the thinking behind this? What are you doing? Is this the responsible thing to do? So even the discussion climate is even changing quite rapidly.
Thank you. And I've got one more for you, John, and then I'd like to actually finish with one final question back to you, Per. I know we're up on the top of the hour here, but for those that want to stick around, I want to address 2 more questions. And then, as Natalie said, we're going to make sure we get back to everybody's questions either by email response and or phone calls. So please keep the questions coming in. We've got a lot of engagement, which is great. John, let's go back to you for a second. This is with the build in greener energy generated by the current president and Democrats as a whole. I really, frankly, on both sides of the aisle. How do you explain uranium's negative performance? We think we're in the beginning of a bull market, but I guess the question is, do you see some of the negative performance more recently being a byproduct of more alternative energies coming on board, or how are you viewing that from a market analytics standpoint, going forward?
Yeah, sure. Well, first of all, I would start off by saying that the price of uranium is up about 50% since the summertime. So that's a pretty material move. And yes, a lot of commodity prices have moved up a lot, whether it's nat gas or oil and other hard commodities. So uranium has moved alongside a lot of others. So a 50% move since summertime, I think, is material. Where are we in 2022? We started the year at about $42 a pound. We got to $45.75 on the back of some supply concerns and disruptions that happened in Kazakhstan because of protests, and the price has kind of drifted back to 43. So we're up, $1 per pound year to date, and I think you have to kind of put that into context relative to the 50% gain that we've seen, as well as just the general downdraft we've seen in many different asset classes, giving some anxiety about interest rates and geopolitical tensions. So I think the price is doing, okay in this environment. And I think many of the investors I've spoken to are not focused on $1 or $2 here. They're focused on that incentive price that I talked about earlier. And that incentive price, depending on which company you are and which mine, is probably 50 or 55 or 60 or 70, or if it's a greenfield or a new development, it could be 70, 80, $90 a pound. So, and that's all about, future supply and ensuring there is availability of supply for future needs.
Great, thank you. And this last one, and then we'll call it. We're at the top of the hour. Is really about an alternative to uranium, which I thought was kind of an interesting one. I have to admit I had to look it up myself before I asked this question. There's been some talk about thorium as a replacement to uranium. So first and foremost, what is that? And then secondly, can it actually replace uranium as a core commodity for nuclear?
Sure, great question. I think take a couple of steps back. Then nuclear energy, the way we use today, uses technology or a process called fission, where you split atoms. In order to split an atom, it needs to be a fissile material. Uranium-235, which is a certain isotope of uranium, is a fissile isotope, and that's what we use in nuclear energy today. Thorium is a fertile element, and when we fertile, it means that it can become fissile once you irradiate it.
Okay.
So it's not fissile on its own, but you need to go to a sort of a pre-stage, if you will, where it converts into a fissile material. So it's a little bit more complicated, it's more expensive, it's a different type of reactor. You can say it's sort of a breeder reactor. You can use uranium for this process as well. Again, it's a little bit more complicated, it's a little bit more expensive, but there are certainly some benefits to it as well. I wouldn't necessarily say it's one or the other. Some countries have a lot of thorium and no uranium. Say India is one of them. So India has an advanced program in how to use thorium for nuclear energy. And again, if we're going to address this, we need to use every technology accessible. For being cost competitive today, uranium is probably a better shot, but I am definitely not going to knock thorium. It's a very fascinating technology it uses, and it's I wouldn't say an alternative, just call it a complement.
Complement, and they can work, they can coexist within the same plant even, it sounds like.
Yeah, in some cases they can, absolutely. Yeah.
Interesting, great, thank you. Well, hopefully we educated more than we confused. This is, I know, a heady topic, but please reach out to us again with any questions you all have. We're happy to get back to you via email and or phone calls. And as always, thank you for your interest and support in Sprott and our work in the precious metals real asset markets.